All right, welcome back to this channel. And on this video, we're going to be discussing about the anatomy of the candlesticks, how they are being formed, and the fundamentals behind their formation. All right, and also the types of candlesticks. Right. So, without wasting much of our time, let's dive into the process. All right, so this is candlestick anatomy. We are going to be explaining the bullish and the bearish candle and also types of candlesticks. We have the bullish engulfing, we have the bearish engulfing, we have the doji, we have the hammer and inverted hammer, right? We have the dragonfly, we have the gravestone doji, we have the morning star and evening star, and we also have the Arami candlesticks. All right. So all of these are types of candlestick. These not all, but these are the major, right? The major candlesticks you can easily spot on the charts, right? Without having to second guess yourself. And I'm going to like explain the fundamental happenings behind these candlesticks, just like I said. All right, so the first on our list, okay, we have the bullish and the bearish. Let's understand what the bullish and the bearish is for those who are new in trading, who do not understand what the green candle and the red candle stands for. All right, so now on this on our left is what we refer to as the bullish candlesticks. The green color here is the bullish candlesticks, and it actually shows us that buyers are actually the one dominating the market in that specific time period. All right, time period in the sense of if you are using the daily time frame, then it will take a whole day for one candle to form. If we are using the weekly time frame, it will take a whole week for one candlestick to form. If you are using the 4 hour time frame, it will take 4 hours for one candle to form. If you are using the 1 hour time frame, it will take one full hour for one candlestick to form, like that, like that. So any chart you are in, right? Each of those candlesticks represent the time frame which you are in with the charts. Do you understand? So now let's assume this is a daily time frame, right? For this candlestick example, this is a daily time frame, and then we this candle actually take a whole day to form. And you need to understand, right, that at what point did the candle open? At what point did the candle close? And all the wicks you are seeing on the candle, the wicks above and the bottom of this candle, what do they actually represent? And that is what we are going to treat on right now. So you understand the reason why those wicks actually appeared on the charts. All right. If you're just joining this video, please do well to watch to the end so you can understand uh, what you're actually doing here. All right. So this actually represents buyers, which means when we see green candles, price tend to keep pushing to the upside. All right. So price opened from this point here. So what happened is that as price opened, sellers try to push the price to the downside, right? They push the price all the way to this low here, right? And then rejected the price, right? They rejected from this low and then pushed the price all the way to this high. When they get to this point, then sellers came, rejected the price again, and then price closes at this point here. So from the point where price closes to the point where price closes is what we refer to as the body of the candle, right? The point where it opens and where it closes, right? It's what formed the body. Do you understand? Why this which you are seeing at the top represent the rejection of price? Rejection of price. That is, sellers push the price, they rejected from this high here to this low, and then from this week actually shows that buyers rejected the price from this point here, right, to the upside. All right, so that is what from the wicks you are seeing at the top and at the bottom of these candlesticks. So you can call it the wick or the shadow of the candlesticks. All right. The same goes to the bearish candle, which is this red on my right hand side. This red candle on my right hand side. It actually shows that sellers are the one in the market, and the only difference is that price tend to go downward when sellers are in the market. It will keep printing red candles. So it's a signal to us that sellers are the one actually dominating the market at this point. Do you understand? Awesome. All right, so at this point, this is like the bearish candlesticks. So the bearish open at the top of the candle. So let's say this is the bearish. Price open here, right? And then buyers try to push price to the upside but couldn't, right? And then at this, when the price get to this high, right, then sellers came in, rejected the price all the way to this low here, right? And then buyers were able to reject price from this low to this point. So this is the open, right? At this point here is the open, this is the close. So the open and the close show us the body of the candle, and it actually shows who is actually more stronger in the market, right? So at this point, because we are bearish, this shows that the sellers are actually the one in charge at that particular time period, right? That is at the period of that 4 hour or the daily time frame which you are in. For the candle to be formed, it shows that throughout that 4 hour time frame, right, it is sellers who are dominating the market. If you're in 4 hour and this candle printed before the next one began, it shows that it is sellers who are actually in control. Do you understand? It's very simple and straightforward. All right, I believe you now understand this. Now let's jump into the types of candlesticks. All right, which we have the bullish engulf, the bearish engulf, we have the doji, we have the hammer and inverted hammer, we have the dragonfly, we have the gravestone doji, we have the morning and evening star, and we have the arami. So I'm going to be explaining each and every one of these one after the other. So the first on our list, we have the bullish engulfing. All right, this bullish engulfing is a signal that price is likely coming to the end of a trend or the end of a pullback. What that means is this, like, let's say this is a bullish trend, right? So spotting these candles here at this bottom here can be a signal, right? That at this point, the pullback is likely to be over, and then price is likely to start pushing to the upside, that is to continue its primary trend. Do you understand? And also, spotting them at the top of a strong move can also be a signal that price is likely to start reversing. That is, the uptrend is likely to have come to an end, right? So they can also be spotted at the top, and it can be a signal for you to start taking your profits or take partials. Do you understand? All right. So they can be used in both ways, in pullback to know when the pullback is likely to be over, and also when the trend is likely to come to an end or likely to start making the pullback a reversal to the downside. All right, so the bullish engulf is actually a buy signal. It's actually a buy signal. All right, it's actually a buy signal. Okay, so the same goes to the bearish engulf. It's a sell signal, right? That is, when price is pushing to the upside, how do we know when to enter the market after making a pullback? So that is where this bearish signal comes in. Let's say price is in a downtrend, then at this point here, let's say this second pullback, this is the second pullback. Let's say at this point, we got this bearish engulf. We can likely say that, okay, at this point, price is likely to start pushing to the downside, and then we can start looking for sales opportunity. Do you understand? And the bearish engulf also can happen, right? Showing that at this point, an uptrend is likely to come to an end. Let's say price has been in an uptrend for long. Let's say price has been in an uptrend for long, right? And then spotting these candles at the top of this move or any of this move here can actually signal to us that price is likely to reverse. There's possibility for price to start reversing from that point. All right, so it can serve as a reversal signal and it can serve as what? As a trend continuation signal. Do you understand? They both go with the bullish engulf and the bearish engulf, but it is best you trade with the trend, as the normal saying that the trend is a friend, like follow the trend. All right. So the best thing is to always follow the trend of the market. So I'm going to actually break down my strategy, which I use in the subsequent videos, right? And also how we can use this candlestick as confirmation for us to jump into the market and how to test stop loss and all of that. So the strategy is very simple and straightforward, but we have to be patient, right? Because I will make those video in due time. All right, but for now, we have to understand what candlestick is all about. All right, this is just like the starting point of anyone who wants to dive into trading in general, because candlesticks are like the language of the market. So you need to understand how to read candlestick before you can even understand how the market really moves in general. Do you understand? Awesome. All right, so the next on our list, we have the doji. The doji candlestick is like indecision. At this point, both the buyers and the sellers, the price open and close are at equilibrium. What happened here? Let me explain it, the fundamental behind this. Now, price opened from this point here, right? Sellers tried to push the price down, but buyers came and then pushed the price all the way to this high here. And then sellers came again, rejected the price again all the way to this low. So the both close and the open are kind of in equilibrium. They're almost the same. So that shows that both the buyers and the sellers, they are kind of, competing. No one wants to grieve for each other. Do you understand what I mean? Like they are both in power. Their strength is 50-50. Do you understand? So we can't really say it is buyers who are dominating or the sellers that are dominating. So they are both in equilibrium. The same goes irrespective of the candle, irrespective of the candlestick. They are like the same thing. All right. So the candlestick color, I mean to say, they're like the same thing because the close and the open are in equilibrium. Do you understand? But if it shows res, it shows the only difference is that the price open at the top, then closes below, right? While if it shows green, the price is open below and then closes at the top. That is just the difference. But they're almost the same logic. They're like the same thing in general. All right, so this is that for the doji candlestick. So let's move to the next on our list, which is the hammer candlestick, right? This hammer actually represents buyers in the market. Now, why does it represent buyers in the market? Because price open from this zone, right? Sellers try to push the price to the downside. They push the price successfully to this low here, right? And when price get to this low, buyers came in, rejected the price from this low all the way to this high, right? And the sellers were able to reject it a little bit and then closes here. So this close and open, this is the open and this is the close. So from this open to the close is the body of the candle, right? The body of the candle at this point actually give us additional signal that the buyers are more stronger than the sellers. The additional signal, what I mean is this week alone, this rejection alone is a signal to us that buyers are very strong because they were able to reject sellers from this point here and then push the price all the way to this high here and then reverse and closes here. So for them to reject price from here all the way to this high, it shows that they are the one in control. So the same goes to the buyers, I mean to the sellers, which is the inverted hammer, the opposite of the hammer, right? Which is for the sellers, right? So this is like a buy signal, which is this hammer candle. And this inverted hammer It's like a sell signal. Do you understand? So what happened here? When price open here, right? Remember, if it is sellers, they open at the top, and then buyers try to push the price to the upside. By the time price got to this point, this high here, sellers were able to reject the price all the way to this low here. So they were able to successfully reject the price from this high to this low. And then buyers came in, were able to still reject the price a little bit and then closes here. All right. So this close and this open here is the body of the candle. All right. So this long wick actually shows us that at this point, the sellers are the one in control of the market. At this point, the sellers are the one, like they are more stronger than the buyers in the market with this long wick. And this red candle, which it has formed, give us additional confirmation that yes, they are the one in control. Because for them to push the price from this high, buyers came in, pushed the price all the way to this high, and then they rejected it all the way to this low here. That shows that they are more stronger than what? The buyers. So that is what it means. And these candlesticks are more stronger when you are dealing with higher time frames. If you are using them on higher time frames rather than lower time frames. Higher time frame like from 4 hour, the daily, the weekly, the monthly, right? Than the 1 hour, 15 minutes, 5 minutes, and 1 minute candlesticks. So they are more of in they are more of higher probability when using them um on the higher time frames rather than the smaller time frames. All right, awesome. So the next on our list we have the dragonfly. So let's explain what actually happened here. The dragonfly and the gravestone doji. All right. So this dragonfly, what actually happened? Remember, it's green. So for the candle to show green, that shows that the opening was below it, was below this high here. The open is here, this low here, right? This is the open of the price. And then sellers came in, they pushed the price all the way to this zone. Sellers were able to push the price all the way to this zone. But when the price got to this point, buyers came, right? And then they rejected the price from this low all the way to this high. And then sellers were able to reject it a little bit and then they close it here. They almost closed at equilibrium. That is, the buyers and the sellers almost closed at the same point, right? So this is not, the body does not actually shows us who is actually dominating, but the rejection here is what you should pay close attention to, right? For for buyers to reject the price from this zone, from this low here, all the way to this high, right? It shows that they are more stronger than the sellers. That is just what you need to understand. The wick of the candle. This green shows additional confirmation. Do you understand? Additional confirmation for you, but looking at the wick, the rejection is what you should watch out for. And if you spot this candle on the daily, weekly, monthly time frame, you see that they always occur at the top or at the bottom of a big move. You mostly see them. You mostly see them. Before a big move occur, you see that a strong rejection have happened. So it's a big confirmation for us, right? Good. Awesome. All right. So this gravestone doji is just like the version of this dragonfly, the opposite of this dragonfly. All right. So what happened on this gravestone doji? Price, remember it is red. So price will open at the top here, right? Then buyers came in, pushed the price all the way to this high here. It was buyers who came in first. It was buyer that was first in the market. They pushed the price all the way to this high. And then somehow sellers came in and said, no, at this point, you guys are over, right? They came in and overpowered the sellers. And then they rejected the price from this high, pushed the price all the way to this low. And the sellers were able to manage to reject the price a little bit and then closes here. Closes very close to the open of the price. So it's almost like price is in equilibrium. They understand, like price is in equilibrium, and then the wick is what you should pay close attention to, right? Because for sellers to recheck the price from this side all the way to this low is a signal that yeah, they are more stronger than the buyers. Simple and short. So for the candle to print red is like additional confirmation, but your first confirmation comes from the wick. For them to successfully reject the price from this high to this low shows that they are more powerful, they are more stronger than the buyers in that particular time frame you are using. That is why I recommend using higher time frames to spot this is far better than the lower time frames, right? The bigger time frames work best with candlesticks confirmation rather than smaller time frames like the 15-minute, the 5-minute time frames, right? Perfect. So this morning and evening star, what do they actually represent, right? This morning star represent buys, right? They can actually serve as confirmation that a pullback has come to an end for price to start to continue its primary direction. For example, let's say price is in an uptrend and then you spot this, right? After a reversal, you spot this shows that okay, this pullback is likely to come to an end, and at this point, price is likely to start pushing to the upside. So they can actually serve as a signal for buys, right? A buy signal. The same go for the evening star. They actually shows that okay, at this point, we can start looking for sales opportunity, right? Maybe the pullback has come to an end. Let's say we have this bearish move here, and then we spot this, right? At the pullback after a reversal, we spot this. Then we can actually say that at this point, the sellers have start coming in, and then we can position ourselves to follow, the big moves. All right, simple and short. So the next or the last but not the least on our list there, we have the bullish and the bearish harami candlesticks, right? These consist of two candlesticks, which is like a mother and a son, right? A mother or something, a woman that is pregnant, actually. Let me use that concept. So this is just like the analogy behind this. And then it consists of two candles, just like I said, and it's actually serve as a bullish signal. When you spot this, it can serve when you see this at the bottom of a strong downtrend, it can actually signal to you that at this point the trend is likely to reverse from that point. And if you spot it at a pullback area, right, it shows that okay, price has actually, made a pullback and is likely to start pushing to the upside. All right. What I mean is this. Let's say the price is in an uptrend. The price has been in an uptrend, right? And then we actually spot this. We can say that, okay, this reversal pullback here has come to an end, and then we can start looking for long opportunities. All right. The same goes for the bearish engulf. This bearish engulf is just when the price has been in a downtrend, can actually spot it as to say at this point, this is like the end of the downtrend, and we can start positioning ourselves to look for sales opportunity. All right. So that is just that about candlesticks, simple and straightforward. And if you don't understand, do well to repeat and watch this video multiple times. Trust me, you understand. And if you have anything you want to ask me or reach out to me for, you can actually drop your comments on the comments section, and I will do well to reply you and catch up with you guys as fast as I can, as fast as possible. All right. So please, if you enjoyed the video and this video has been impactful to you in one way or the other, please do well, right, to hit the like button and the subscribe button as well to support me so I can come up with videos that is educative like this in um my subsequent videos in general, right? So I can actually, guide you on how to implement this with the strategies that I'm going to bring to you, right? But I can only bring that if I see your support and your follow up with me. All right. So thank you so much for sticking to this video to the end once again. I really appreciate your time and thank you all. Thank you. Peace out. God bless you all.